Hello traders, Gary Wagner here, just about 11 o'clock in Honolulu, 4 o'clock in New York on Tuesday, the 10th day of February, 2015, and this is the daily report for gold and silver. We have the dollar getting stronger, we have equities getting stronger, oil getting weaker. Net effect on gold today is it is off about $4 to $4.30 on the day. Currently trading at $12.34.5 roughly. It has had a low today of $12.31 and a high of $12.45.30. Silver also lower on the day, off about 6 cents. Below 17 again, 1690, 1691. In terms of the highs and lows in the market, 71 on the low side, 1671, 1708 on the high. More on silver towards the end of the show. So before we get to gold and our current trade, just want to take a look at these outside markets. First, we're looking at the dollar index. This is a weekly chart. It is up on the day, it is down on the week. But we can certainly see the real resistance that came in roughly at 96. Following week, look at this dramatic low that it makes almost to 93. Recoups very quickly. Now it's sitting almost at 95. As I said, that's on a weekly. If we reduce this to the daily, we'll get a better idea of what we're looking at today anyways. Let's go ahead and kind of make this chart a little bit more visible. And now when we look at it on a daily basis, you can see that we could in fact still have a top forming in the market. We've got all of the technical signs that we could see some underlying weakness come into gold. This is today's day. It is up a little bit, but it has got to take out these highs at 96 before I believe we've got more upside room before we see a conclusion of any kind of a correction. So when we look at the crude oil market, first on a monthly basis, you can see that it is higher. We had those 2 weeks where it went up, and this is how we can see these 2 weeks. This, of course, is on a weekly basis. Last 2 weeks, but on a weekly basis this week, it is lower, back around $50. Not quite there, but it has dipped below that. And we can really see the most recent activity if we look at it daily. And let's go ahead and kind of make that a little bit larger. But you can see this is today's move in the market. As we saw it hit a high, this just shy of 55, now back around $50 per ounce. And if anything, of course, the big news today really is a dramatic recovery in the U.S. equities market. Standard & Poor's up about 22 points, triple digits in the Dow Jones Industrial, I believe around 140, 150. I haven't looked at the close. This on a half-a-day chart, you can see this tremendous rally that ensued, currently trading at 2063 on the Standard & Poor's. So how do all the above mentioned markets, how are they really influencing gold today, and what are we seeing? Well, first of all, we are seeing some weakness in gold, off a couple of dollars. More importantly on the weakness is the price point, at least to me, where it's at. And what I mean by that is as follows. This is really that top that we need to be trading above right here, roughly in terms of price at about, call it $12.38. We're sitting about $5 shy of that. But what's really more important to me is we're sitting underneath this, meaning that it's currently acting as though it is resistance and not support. And to really see our trade, we are long, what, roughly at 41, about $7 from here. We have a stop at 27, low was 31. My sense is that if it's going to hold, it needs to hold this area. And that's what's very, very critical. Now, we do have a meeting beginning tomorrow in which you're going to discuss the austerity programs with Greece, and we'll see how that kind of moves into the market, because that could dramatically affect gold prices one way or the other. So we will absolutely be paying close attention to that meeting scheduled to begin in Europe tomorrow. So really, to summarize, we'll look at this 180-minute chart. As long as we maintain our price point in this area and find support and move back up, the current model that we're looking at, meaning we're looking for a conclusion of wave 4 at this point, I believe is still valid. However, if we get any kind of solid break below this point, and it is trading a couple of dollars below, then really our next level that it's got to go to is about 12.19. And if in fact it goes to that, our model as it exists doesn't have validity, because we either have to say that what we're looking at in terms of an Elliott wave count, we would still be in a wave 3, and this would be a correction within that wave 3, would be the only valid model or bullish model that we could still take out of it. And the reason that you could still maintain a bullish model, of course, is because we did get this higher high, and if it falls even to the 19 area, we then get a higher low. So it fits within an uptrending market. It just doesn't fit within our current Elliott wave model. So as I said, we'll keep a close eye on that meeting and see how that unfolds. So traders, as far as silver goes, I still see some real resistance in the market. We should have been able, with this rally in the equities markets, to actually have seen silver trade higher today. It's an industrial metal. I draw your attention to these tops here. Now you notice I've put a line, but they're not at the highs. They're where these real bodies are, because I think that's more of an important area. And it also matches up with our highs. That is our current level of resistance in the market, roughly 1710, 1715. We are sidelined in silver, long gold, under pressure. Market currently trading 33.34. This has been Gary Wagner, wishing you, as always, good trading. We'll talk to you tomorrow for another daily update and review. Bye-bye.